All right, all right. We're here today, special real estate podcast. This is our first real estate podcast. I thought it was a good idea as we're coming into the spring season. We do a lot of work in the real estate business, so I thought no better way than to bring on some past podcast guests to work together and talk about. There's a few new things. You know, we have the spring market. We have a new law with flood insurance. Figured now's a good time to bring a couple guys that are industry leaders in. So we'll start with, we have Aaron Levine from LG Insurance. Good morning,
Thanks, Tom. So happy to be here again with this great group of professionals, right? It's like a little dream team in here. All we need is somebody wanting to buy a multi-million-dollar home walking through the doors, and then we're all very happy.
I do agree.
I would tend to agree with you too.
So next up, we have Christina Meyer from Worldwide Title.
Hello, everyone. Happy to be here again. Looking forward to addressing everything that we can about the amazing world of real estate. So it should be rather interesting.
Perfect. We have JT Hazelet from Hazelet Realty Group.
Thanks for having me back, Tom. Can't wait to get into it.
Absolutely. And we have Mike Randazzo from
The man with the mortgage
The
plan.
man with the
From
mortgage
from
plan.
Advisors Mortgage. I knew I was going to mess that up this morning. All right, yeah, next time. So let's just jump right into it. So the market's strange.
Definitely a little strange.
So coming into spring, JT as the realtor here, what are you seeing so far?
Over the last couple of weeks, we've seen a little bit of an uptick in inventory, which is actually a good thing.
Agreed.
I think if my numbers are correct, about a month or two ago, we were at about 2,500 total listings in Monmouth and Ocean County.
Total between both counties.
Total on Flex MLS. And I think this morning it was like 27 and change. So
you're up another 10%.
Right. And so that's definitely nice. That gives our buyers a little bit more options.
When you think about 2,700, though, that's a small number in, like, when you think about how many towns and how big Monmouth and Ocean County really are.
Absolutely. Absolutely. I know typically before, I guess, like 2020, the average would be 4,500 at one time. So we're sitting at about half of what I guess we could say typically would be. And that's up. That's up from where we were last year. That's up from where we were in 2020, 2021.
Well, we also have to remember, too, we have that many more buyers, right?
Absolutely.
And I know that a lot of people, right, you've got your beautiful, trees and different things like that. But when somebody comes in and wants to build houses, it's truly because we need them, right? The population is far greater than the amount of homes in which we have. So it's almost like a catch-22 in some instance. You don't want that to happen, but that is why we have such a supply and demand issue. And majority of the people, unfortunately, are completely priced out of the market. And that's very tough in this area.
Yeah, this area is tough because you have a lot of people that I think that came down from Bergen County, from Essex County, as well as from the boroughs of Manhattan and Brooklyn and Staten Island have come into Monmouth County as more people are working from home or have less demand into those locales that is causing this, increase of prices as well as decrease in the amount of inventory. And again, some of these people that are in northern areas, their taxes were higher than when they come down to Monmouth County. So they don't see this as an overinflation in the price of the house.
It's a win for them.
It's a win for them.
Absolutely.
Again, you have 30,000 taxes and you go down to 15,000. Taxes never come down.
Right. Very true.
It's very, very true on that. But I think we're also blessed to be where we're located because of the proximity to the city. So, coming especially maybe even down into Ocean County, you could be in Manhattan in an hour, 45 minutes, or the ferry downtown, depending on if you come up and take that. I think that's where we'll always hopefully have a little bit more moving than other areas of the country. But I mean, most of what we're still seeing now, even from a title perspective, and I'm sure maybe you with contracts or even Michael with, mortgages, a lot of people are coming still from New York, Staten Island, Westchester, a number of different transplants that are making their way down here, largely because they can work from anywhere.
Mm-hmm.
Except there is a big movement back into the office, right? It's a giant movement back into the office, both in Manhattan and around. So it's changing the dynamic. I know I've moved some people back into the office on my team because there's certainly production related issues. And there's capitalization issues with respect to those larger commercial spaces and these corporations hemorrhaging money without people in seats, right? So it's totally another conversation to get
Absolutely.
into, but we're definitely seeing the transition back into the office, and it's really moving quickly.
I think that we as humans with work, that is where work gets done, in the office. And I'm very fortunate with my team that we all like to work in the office. We're all fully outfitted to work at home, but you feel the energy. You're hearing what's going on with files and different things like that. And that speaks volumes. And quite honestly, I think that could be a huge component to continued success, that it was never something, that we were requiring or allowing people to possibly take advantage. I think that the obviously efficiency of those companies has gone down tremendously. I know that I love watching those TikTok videos, right, where the guy's like in the pool and he's in his tube, and then all of a sudden his phone goes off. Hello, I'm here. My mic was off, and
Right.
Those are just some of the things as a business owner you don't want to see, right? You don't wanna
Except
see
now
that.
with AI and deepfakes, you can put yourself anywhere you want to be.
Fair. Very true.
Stayed a little out of that AI. I feel
Background filter, and you're good to go.
I feel like I'm dating myself. I don't know much about it, but maybe one night if I want some long reading, I'll take a
Yeah,
look and
that's a
dive
rabbit
into
hole.
it. It's a rabbit hole that I guess is just going to completely change the world if it hasn't already in some cases.
I think it has started
I think
to
it's
change the
definitely
world,
started.
and I think it's
Started.
going to continue. And I think, I think when you look at we're off real estate for a second, and we'll get back to it.
Uh-huh.
But like when you look at employees and what businesses need to run businesses, you're going to need less employees. So these employees that want to swim in the pool during the day, it's not going to really work out when you get to the point where you start to look at, well, what do we need here? What can we do from an AI perspective? And it's going to change a little bit. So I think that's.
Absolutely. And to bring it back to the real estate realm, that's a lot of what we're seeing kind of now is the same way you were just saying AI is going to start to take over, and the people who are sitting in the pool are going to kind of be out of it. That's what a lot of the part-timers, at least as realtors, are experiencing right now in correlation to the commission changes that are going on and the oddness in the market, I guess we can call it, as we said before.
Very good way to put it.
Right. But I think with that's driving a lot of the part-timers, the people who like to sit in their pool more than like to be at the office making calls or sending out postcards or whatever.
It's hard if you're going to be good at your career to do it while in the pool or
Absolutely.
not focused on the business.
Exactly.
I everybody wants to have a free lunch. I mean, I don't know anybody that doesn't, but at the same time, if you want to really grow in your business in the real estate trade or in any other trade, you have to be there. You have to be doing it. You don't just,
I'm taking offense to all these pool
daily
references
grinds.
because I was in the pool swimming before I showed up here. So
Oh, yeah.
now I'm like,
this guy. So, all right. So, JT, when you say about the part-time, what do you think with this new law coming around and this new ruling, what's that going to do to the part-time?
Well, one of the two big changes that we're seeing is...
Tell everybody the two changes.
Okay, well, the two changes that we're facing here is that the commissions can no longer be advertised on the MLS. And for those that don't know, right, as it is now, when as a buyer's agent, when we go on the MLS, we see what the seller's agent is paying out. It could be 2%, 2.5%, 3%, whatever it is. That will be no longer. So we have to now negotiate for that. And the second
Negotiate that with.
It's a good question, Tom. That's either going to be with the seller's agent, with the seller themselves, and or your buyer, because the second major change is that they're no longer commingling the commissions. So that means that seller will now have the option to not pay a buyer's agent. So that means now as a buyer, you'll have to come up with the buyer's agent fee, which opens up a whole nother can of worms. But essentially what we're going to have to do as buyer's agents is have the buyer consultation, sit down with them and explain to them, hey, my fee for service is X.
which is good as a professional because then you're going to have a contract with your buyers.
Yes, sir.
You're going to have that other set of buyers which are going to say, okay, I'm just going to go on Zillow and represent myself because now it's going to be very clear that the seller there's going to be no more dual agency. That's going to go away.
Yep.
Right. So you're going to be representing yourself, and then you're going to probably want to save money on an attorney and not hire an attorney. And then you're just screwed six
Right.
ways at
Absolutely.
that point.
Yeah.
Absolutely. But to continue the rest of that conversation looks like is, as the buyer's agent, we say my fee for service is X. Now, we could find you a house where a seller is offering a commission, but we don't know that until we put in our offer and they tell us yes or no.
Wow.
So I could ask the seller's agent, hey, are you cooperating? But they can tell me yes, but they don't have to tell me to how much. They don't have to tell me anything like that. They just have to, it's going to, especially in the beginning, and to be clear, these changes haven't been finalized yet. They haven't been settled by a judge. So I'm sure there's going to be some changes and some alterations to cover. Absolutely.
There's also, Mike can answer this question, but when it comes to federally backed loans, you might not be able to pay a buyer's agent commission as the buyer.
VA you can't, but every other type of loan you can with a concession. So you are able to do that. In the past, we weren't able to do that. Mm-hmm. Now it's going to be considered another part of the closing costs. VA buyer cannot pay a commission. Yeah, I saw that the other day. So what I'm saying is, if there's going to be a third-party website, right?
I believe.
And that's going to show what the commission getting offered, if there is any, from the selling agent and the seller. You have to go in there and...
Sellers are so greedy right now, and they're going to get even greedier when they're like, "Oh, I don't have to pay a buyer's agent."
Well, I think that's actually going to come back to bite them, because as a seller's agent, we have to look out for our seller's best interests, and for their best interest is to offer a buyer's agent commission.
Agreed.
Because what you're going to do, and for our market, especially in our area, it's driven by first-time buyers. I think last year, 37% of homes sold were purchased by first-time buyers.
Wait, let's just hold on that side before we go to the next part.
Go ahead.
37% of first-time buyers.
No, all out of all homes sold last year, 37% were bought by first-time buyers. Which
In Monmouth and Ocean? Or?
out of Flex MLS. So to know that, we already know as is, it's tough enough for these first-time buyers and really anybody to come up with their down payment and closing costs. That's one of our biggest hurdles as professionals here, and I'm sure you could attest. So to now sit down and say, the buyer is now going to have to figure out how to come up with their if they're lucky, their 3.5% down for their down payment, their 2 to 5% for their closing costs, and another 2 to 3% for a buyer's agent. You're pricing out half of the people who could buy your home before you even put it on the market. So as a seller, it just makes sense to offer that extra 2%, because now you're putting back that 50% back into your realm, and that's going to drive up your competition anyway. So you're going to make up that 2% difference just by having that many people.
What's the proposed date that this is going to go into effect? Because
right now it's July.
As of now, it's July, but honestly, I don't see how we could do that, because right now we are writing contracts that are going to come up in July and close in July. So how are we supposed to make these changes now?
Probably after July.
Maybe I think I was gonna say I think the way
there'll
that
be a run out period.
Yeah.
up until September or something like that. Exactly.
Like that, right.
Because you're writing deals that are going to close in June and July right now.
Exactly. So how are we supposed to figure all this out when it's not closed or settled?
Typically,
yet?
90 days after final form approval is
Something
when
like that,
things
right.
go into 90 days. Things will go into effect on. So
by
when
the
it gets to
third
that,
quarter.
so
Right.
maybe by July, then you have another
End of the
quarter
third
to go.
quarter, beginning of the fourth quarter.
So from what I see, it's going to affect mostly the people that don't have a lot of their own money. The ones that are relying on the down payment assistance, stuff like that, because now they have to come up with the extra money. So a lot of the people get down payment plus concession, and now you have to figure out the buyer's agent too. Mm-hmm. So if they can't aren't able to squeeze all that in and come up with that, those people are going to have a hard time finding representation. You know what I mean? Because a lot of people are going to say, well, you don't have any skin in the game.
That's also going to put a big hit, and one of the other big things that are going on right now, it's going to put a big hit on the lead gen systems like Zillow and Realtor.com, who sell buyer leads. Because now, as it's set up right now, if Zillow sends you a lead, you're supposed to just meet that person at the house. But why, as a buyer's agent, am I going to meet that person at the house if I don't know that they could pay me? I don't know if that house is I don't know if that house is offering a commission. I don't know if that person can pay me. Why as the agent?
Zillow's gonna send you $22 via Venmo to
Right.
You spent $4,000. Here's $22
door
back.
opening charge that you get to charge a door opening fee. Oh, you want to see this house? It's $25.
Yeah.
Right.
I was on a Zoom last night and they were talking about that. They were like, "Oh, can I charge per each
Per
house I
door.
show?" And I'm like, "I don't know about that."
Probably.
Essentially,
You probably have to throw it on the final CD, maybe. I showed them
like
50 houses. So here you go. There's extra money. I owe that gas money.
That just makes it a little bit
Trickier.
trickier.
It's gonna
You
be.
would think that they would give some sort of, guideline or something. I mean, this is going to be a huge change, and I would personally think that majority of the people, Americans, sellers, they might not even know that this even exists in this moment, right?
Absolutely.
This was like a shock and awe last week, kind of dropped like a bit of a bomb, and I think it, went around real estate immediately, as it should. Without the agents, we don't exist. So that's where, the level of respect for what you guys do. And I think that even further, as we've seen the change in the market, and of course, many agents that have elected, okay, this is just no longer for me, might have jumped on in the pandemic. I think that this could potentially even force some further ones out that might now not want to have to take the extra steps. In that case, there might be a lot of free work in essence that you're doing, JT, right?
You kind of clear out the guys that were half in, half out.
Correct.
And I think in your
Absolutely.
case, JT, as you do this as a career. You're not doing this as a part-time guy, like after work and trying to show 3 of your friends' houses. Like, so in your world, I think this is you're gonna have some uncertainty and some turbulence at the beginning, but I think long-term for you, it's a win.
Absolutely.
For you, for the guys at your firm that are full-time guys, I think you guys will all benefit because again, you're going to be in it. And I think, I don't need to tell you because you're Mr. Instagram yourself, but I would probably educate on this. Once this finalizes, I think you have an opportunity as a realtor to educate people because no one's going to know it. And to the point of the uncertainty, you can kind of take a lead in that game for yourself.
Absolutely.
Yeah.
Which is confusion now.
We've already started to see that before everything has been going on. We started to see, like we said, the people who got started during COVID. It was basically like deals were falling in your lap.
Right.
You didn't really have to work.
They thought,
No.
that's the problem. They
That's
think
what
it's
I'm
so
saying.
easy to get. Oh, yeah, I'll get licensed as a mortgage or a realtor.
It
Everybody's
was
making a lot of
relatively
money.
Easy now that you have to essentially work to get your clients, and you have to show your value, and you have to do all those things. We've already started to see the drop off in the part times or the people who didn't want to do that or relied on.
Hopefully
those
they still have their
agents.
pool so they can go.
I'm hoping so they have their pool so they can go float around.
Until they start foreclosing on them.
That's another story that's for another podcast, maybe in about 6 to 12 months.
Uh-oh.
Yikes.
Lots of
The foreshadow.
the short sale, roles are starting to present themselves, hearing a little bit more about people's financial hardships for, mortgages that they had to take out on overappreciated homes. And,
My question for Mike is, are you starting to see some refinances, some cash out because people have racked up too much debt, even at the interest rates we're at right now?
I'm actually doing a decent amount lately of the DSCR loan refis on investment properties because you're already going to pay a higher rate on an investment property. So a lot of people are saying, all right, well, if I'm going to be in the 8s or 9s anyway, still better than my credit card at 22, and I save the money, and it's very almost no doc. Just as long as the rent that you get covers the mortgage payment, that's pretty easy, And most of them have a lot of equity from this last boom, yeah. So yeah, it started to tick up with that, yes.
Those are interesting loans that I actually learned about that from another advisor's rep recently, and it's a great concept because it's cash flow based, right? But then it gets to a point is okay, I'm going to take this $100,000 in equity out of my investment property, right? Then you're going to rack up another $100,000 in credit card debt.
But it's a cash. At that point, it's a cash flow game.
It's a cash
yeah,
flow, right?
it is a cash flow.
The thing is, a lot of people are doing the home equity lines of credit, but you can't write that off. There's no interest to write off anymore. You know what I mean? And the rate's almost the same as a
Correct.
refi. So might as well just do it and get the breaks, the tax breaks,
I do see a lot for their refis, sparingly that are there. That majority of people are doing debt consolidation. I love when they have the ability to do that. It's such a weight off of people's shoulders, and just like Mike said, exactly 8.5% or something like that. 7% is certainly a lot better than the 22. But that's also where the investor market has been tremendous as well. It's a huge portion of my business, and just, they're used to paying 11-12% for hard money. So for us, there's no difference in that. It's just the title companies who actually want to work those hard properties, clear those properties. That's hard to find, except at Worldwide Title, baby. Come on now. I want them.
Yes,
I want
ma'am.
the messy ones. My girls want to clear them.
Messier the better.
That's it.
Always.
What kind of
Now,
podcast is this?
Who knows?
where do we go downhill? But what about this new flood insurance?
So
a
it's-
lot
it's-
of houses in Monmouth and Ocean County.
It's so this legislation went into effect on March 20th. And on March 19th is when the NAR ruling came out, and all people want to talk about is compensation. Like, it totally trumped the legislation, the issue that's going on, and it's going to affect sellers big time right now. So we were downgraded big time when it comes to, but it's okay. So what happened on March 20th, if for anybody that doesn't know, is the seller's disclosure form has been updated.
Okay.
It's now 117 questions long from 105 because there's
12 new questions.
Great.
because there's 11 new questions related to water and flood for any seller. Now, it's not just residential real estate. It is commercial transactions. It is landlord-tenant. You are putting a tenant into your residential property. You need to provide this new flood disclosure form to your renters,
Wow.
right? Commercial leases, commercial transactions. So what happens here is that these questions are not, you look at the seller's disclosure, if you can visualize it, there's a lot of yes, no, unknown.
Yes.
Now it's a lot of these questions on the flood side are yes, no. You have to answer definitively. And there's questions that go into, has the property ever experienced any water damage? Not just flood. So it could be, and it's not your pipe bursts in your second story bathroom and leaks down and ruins your floors. It's, have you had water seepage into the basement or your crawl space? Has there been a water backup, a sump pump issue? Have you had your property, not just the home, your property inundated with water? So if you have a pond that fills up every time there's a major storm, that
That's
could be
yes,
something
yeah.
to disclose, because that seepage will go into the foundation of your home. So this talks about foundational water, hydrostatic pressure, and also flood insurance. And it goes into a couple different pieces. The one is, has the property, not the current owner, has the property ever received any assistance from FEMA? So think back to Hurricane Sandy,
Oh, yeah.
when everybody got their $30,000 check from FEMA. Those properties where those checks were received to those owners, the property is required to have maintained flood insurance for basically eternity,
Mm-hmm.
right? So if you're the third buyer after Sandy, you don't realize that, but that could come back and haunt you.
Is that
at a
stored
later date.
anywhere? Like, can you go on a website if you're going to buy a home?
So
say
there's-
like,
There's data stored. So I did this myself because I live in a high risk special flood hazard area, and there is a way to get the property history. The only person that can get the property history for flood related claims, and this is just claims data, is the current owner, right? So JT, if you're taking a contract on a listing and you're getting the seller's disclosure completed, you now need that flood section completed, which if you download a new seller's disclosure form, that'll be on there. So yeah, you have to check off whether the home is currently in a flood zone, which is fine. That's easy to look up. We can look that up online. But then there's questions: has there ever been a claim? Has there ever been any water damage? Right? Has the property ever received any assistance from FEMA? You're not going to find this stuff out. Your seller doesn't know this if they're the third owner since then, because everybody's kind of let it go by the wayside. So now there's some extra stipulations in there. But anyway, so you can email FEMA, and there's a form, and I can get that form, and we can get it filled out, and they'll send the flood history of claims over to the current owner. So if you have an elderly seller that's technologically challenged, if you have an estate issue, you're going to have trouble getting some of this information because FEMA will only release it to the current owner of the property. Not to you, not to me as the insurance agent, only to the current owner. So it's a huge pain in the ass. It's a huge hurdle to get that data. So it's something that you need to get it up front, because technically you might not get out of attorney review if your attorneys are up to date without having these documents correct. Because the last thing you need, your brokerage needs, or your attorney needs is for water damage to occur. And they're like, oh, they told us there was no water issues in the house. Seller's disclosure here was filled out incorrectly. I'm going to sue them.
Yeah.
Right?
And everybody's too happy.
And everybody's too happy.
Right. Now, what happens in the event? Because I know for flood insurance, you don't need to carry it if you own the house outright. What happens in a sense like that?
I mean, listen, if you're not in a special flood hazard area, you don't need to carry. The bank will not require you to carry flood insurance.
Right.
If you own the home outright, you can make your own decisions sometimes.
Right.
Technically, if that property has received assistance from FEMA, you're supposed to carry it in perpetuity regardless. But that's silly people do silly things.
Right. Yeah. No.
So, quick question, Aaron, on that. Can you use a power of attorney to go through to FEMA, or is that not going to happen?
I haven't gone down that road yet.
Mm-hmm.
And this is one of those things where I'm educating, I'm helping. And at the end of the day, I hope to sell the insurance to the buyer of the property. But, it's my job to help agents and lenders and sometimes title folk with their buyers. I think I'm below you, actually, sometimes.
No.
An arm wrestle at the end.
Love my home insurance, guys.
I had a weird situation happen years ago because of Hurricane Sandy. Guy had a property in Passaic County, and he was not in the flood zone, owned the house for a while. After Sandy, he wanted to refi, and now he's in his flood zone, and it was very expensive because there was some type of basin out there or whatever. And
people
he was
think
getting
that
mad at me, like it's my
Monmouth
fault.
and Ocean County are where the flooding happens.
No.
That's the crazy part.
It is
not.
in Passaic County. I mean, I do remember, or even, you don't even have to go as far back as Sandy when, the streams and so forth. It is a shame, right? I think it's a shame for everyone as we then go back to discussing, the challenges of the market where we are, the fact that people are having difficulty coming up with 3.5%, are going as far as saying, I need this down payment assistance, so we have to buy more time from the seller. All of these different variables, and then on top of it, the skyrocketing costs of insurance in all capacities. Then you bring flood insurance into the picture.
Let's all blame Aaron now.
So
It's a real thing, though, and we deal with a lot of first-time home buyers. We have a whole segment of our business, which is home purchases. And especially, so in our coastal areas, we have fewer markets, and we just had one market, another homeowners carrier, not exit the state, but went on hiatus for the next period of time. So if you look at anything a half mile and in, we have 1, 2, maybe 3 insurance companies that are going to write the homeowner's policy. The homeowner's policy is your fire, your liability, and your wind coverage. Flood insurance totally separate. Somebody asked me the other night about a property in the Bayshore area, right? So if we go north into Keensburg and Keyport, those flood insurance rates are through the roof. And that's where first-time home buyers can afford to buy a home. They just can't afford everything else that has to go into that purchase. Your ratios, go through the roof. And then I have lenders, Aaron, the ratios are out of skew. What can we do here? I'm like, nothing. Sometimes we try and help, but when everything is so astronomical, we can reduce coverage and we can increase deductibles to where they're appropriate. But that puts the buyers in trouble also. Mm-hmm. I don't like doing that, right? Because that's not a practice that we try to preach, is because okay, we'll increase the policy later. They never increase the policy later. Everybody wants to pay nothing for their insurance, right? They want to pay Hyundai prices. And then when they have a claim, they think they have a Cadillac Escalade, right? I don't like to be caught in the middle of that conversation. We want to do it right. We want to do it the first time because I'm lazy. I only want to do it once.
Fair.
Absolutely.
Well, in essence, Jersey is not that bad because I do Florida too. And ever since that building collapsed,
Oh yeah.
oh man, my friend was buying a condo down there, and the insurance was like $4,500 a year, $5,000.
That's without wind.
Yeah. I mean, it was ridiculous. And he's
That
like,
market's going to have a
I was
problem.
like,
That's
holy
without winning.
cow.
Everybody keeps moving to Florida. I'm like, you can't afford the insurance. You're saving on your income
Yeah.
taxes, but you can't afford the
Yeah.
insurance.
Right. And the cost is pretty much the same when you average it out, you know?
Well, I think, again, the astronomical prices, but I think that you can certainly attest, but for us as well, we're noticing you're fortunate enough to have your parents, your grandparents, a friend, finding a lot of people that are either going on the loans, parents, grandparents, a newly, first-time home buyer, they might need assistance in co-signing, gift checks. A lot more people are taking advantage of the county or state first-time home buyer grants. These resources are out there. They take a little bit longer time if you are going for, state assistance, which is open to anyone in essence. But it also then brings us back to reality of how many are just struggling to reach the American dream, which, as we know, is in essence dead in some
Being on the
cases.
Wingman podcast is really the American dream.
That's it.
Absolutely.
Well, that's actually what
I
I
would
want to
achieve
do
my
all day
goal.
long.
I do,
I
yeah.
mean,
It's the second
Totally
Quit
agree
won't
with
quit,
me.
baby.
I totally agree with you. I think that is the American dream for business owners. If you're not a business owner, you have no. It's not that fun.
so I'm seeing a lot of that. We'll be preparing, or not necessarily preparing, but reviewing deeds, and we have multiple parties, how they're taking title to ensure that everything is going to be as it is, because a lot of the people that are just assisting them financially don't want any interest. They're just, helping a sibling, a cousin, a friend, their daughter, something like that.
JT has done a great video about buying with, and his son has also done it too, about buying with zero money down.
Yeah.
So,
I actually bought my house with no money out of pocket, so I try to teach people how to do that. Yeah, I just combined the down payment assistance and the seller's concession, which was nice.
so which is a
Genius.
great education for that first-time home buyer.
It is,
Genius.
but it's also, the problem is a lot of those people barely have anything. You were probably okay. Their credit's barely 620.
Right.
They got $500 in the bank.
Right, what
oh,
I
I saw
caveat
this
on
guy
top-
says
yeah.
he bought this. Whatever.
What I always say on
And then
top
it's
of
like,
that.
listen, you can't look at every situation and think you fit the box.
Results
problem.
not typical, right?
Correct.
The little asterisk.
Yeah.
We have the fair harvest statement on the stock
You
reports.
have to, if you fit the box perfect, it's a great thing. But
Right.
You
And what
also have to realize that when you do the stake rent, you can't sell or refinance for 5 years.
Yeah, without paying it back.
Right. A lot of agents don't tell them that. They just go, you're getting free money, 15,
Right.
20 grand, whatever. Get the, your family has never owned a home. Now you get 22,000.
Right, and I
then
think
when I
that's-
tell them that, they go, oh, so I was going to sell in
Yeah,
2
but
years.
you got a great title agent who's going to go through those docs with you pretty
And my
pretty in detail at the closing table and say, no, nothing happening for 5 years. That's all goes down in worldwide title.
and a part of my buyer's consultation before we even approach any of those things is when I talk to them about it, I tell them I ask them, I should say, what are your plans for the house? Do you plan on living here for 2 years? Do you plan on living here for 5 years? Is this your forever home? Because if it's your 5-year forever home, it doesn't matter. If you only plan on living there for 2 years, we're going to have to remember when it comes time, you're going to owe that 15 grand back. So I think in that essence, and the other thing that I was going to say, and you could probably attest to this because you approve people for their loans, one of the big issues that cause a lot of the first-time buyers or people in general to need a cosigner or barely fit the income standards is because they pay like $500 for their car, $800 for their
They
car.
make $45,000 and they got an $800 payment.
They drive a $50,000 car
Yeah.
and they make $40,000
Yeah.
a year. It makes no sense.
And then they want to buy a house.
And then they want to buy a house. And I try to tell everybody, and I did that when I was younger too. I used to sell cars. I bought a car. And then shortly after realized how dumb of an idea that was. But what I try to tell everybody is like, you could have the house and the car. You just have to do it in the right order. Because the car is still going to approve you if you have the house, but you're not going to get approved for the house if you have the car.
You'll be living in the car.
You'll be living in the car, right?
Yeah, that's it.
And- right. So I think that's been one of the bigger problems, that and then credit cards. But the big culprit is the car because it eats away at your debt to income ratio.
Big point. And, well, if they have 10 payments or less and they're buying it, we don't have to count it.
Right.
But they always think they don't have, can't, oh, I'm leasing it. No,
No,
they
it doesn't
always will
count.
count the lease because they assume you're going to take another lease.
Absolutely.
Most people do. You have the cycle of leasing.
Not your
leasing.
car.
Exactly. So that's why that's that way.
All right, I want to go to some final thoughts before we wrap up today. Christina, remember when you used to tell me you were shy on camera? I don't believe that anymore.
Nah, I don't think
After
so.
the two self-plugs there. I'm going to go with you're not shy on camera anymore.
Agreed.
I appreciate that, gentlemen. I definitely needed to boost the confidence. It's interesting because I never cared. I don't think that. Yeah, I never necessarily cared to put myself on camera. But the gift of gab has always been with me. So the Wingman family has definitely taken me out of my comfort zone, making some, little videos
I
in my
love it.
conference room.
I think it's the greatest thing that you are no longer shy, because at the beginning you're like, no camera, no this, no that. And now you're here and you're ready to do the next one.
Tom, again, I plug Wingman all day long. You guys have done amazing for me, for my clients. I'm just grateful to be a part of the Wingman family. And I mean that wholeheartedly. And I'm grateful to refer anybody that I can. Hopefully that's using me for title insurance. But if not,
Contracts now, if you buy a home, you have
you got to use me, baby. I'm the best. But I appreciate everything that you do for me, for my business. And I'm just super excited.
Awesome. So last final thoughts is, what do we think of the spring market and the 2024 real estate market in Ocean and Monmouth? We'll start with JT. All right, Aaron, what do you got?
I mean, wishful thinking is great. Listen, just some smart buyers, some reasonable rates. I think will create some opportunities. Sellers need to start selling, and those opportunities need to come around. We'd love to see a higher volume of close ratio because that helps our business. Because right now we're not trading insurance amongst between homes because we're trying to keep people as put as possible. Without upsetting things because of the volatility on the insurance side. So we definitely welcome the influx of new home buyers.
All right, Mike, where is your head at?
Okay, so I think in June we're probably going to get our first rate cut. And I think once that happens, you're going to see an influx of a lot of people coming in the market. It's going to make it boom. I hope it's like 20 or 21. That would be awesome. But we need more inventory. So those people that have 2 and 3, 4%, they'll be more inclined to sell if they can get high 5s, low 6s instead of 7.
So you think June is the rate cut?
June, I think it's going to be the first rate cut.
Okay.
Yeah.
And they're signaling 2 or 3 this year?
Yes.
That's what they said, yeah.
Right.
And I agree with that statement because the house that I'm in right now, I went from a 3% mortgage to a 4.25%. I'm like, oh, I can't believe I'm paying so much. My mortgage is so high. I'm like, thank God I'm at 4.25% right now.
Right.
Then I'm like, now I need a new kitchen. I'm like, cash out refinance, but I got to wait till the rates come down to 6%. So when you get a couple ticks down, it's gonna reinvigorate people.
I
to
bought
start
my
moving.
first house at 8%, and I didn't think that was bad.
It's not the rate. It's the cost of the house.
It was a rental. It was a rental property in Long Island, and at 8%, I could still make the numbers work, and it's how my real estate career started. So,
But
I'm not mad about it.
We all have to look at the history of rates, though. Everyone got spoiled with that 2-year boom, 3 years, and that's the problem. They're all like, "Oh, I got to wait till they come down again." They may not come down again like
Even
that.
when they come down, they're
Yeah, not like
down
that.
too
That was
An
that's like
anomaly.
a flying pig. You see that one time,
There was a lot of things. I mean, there was just an article the other day, and we hear about how many, how much houses are selling over. I think there was a house in West Orange that sold for like $220,000 over asking. $220,000, and I mean, and this was a beautiful, just modest colonial. So, as people, we're going to adjust to higher rates, but when the home is 150 or 200,000 less, than your standard starter home, that's now almost 600,000. And that's the challenge. And I'm sure these professionals can also agree that I think that that's what the issue is. And then again, that reverts back to the supply and demand. But you didn't ask me about my opinion, Tom. You didn't ask me about my opinion. We're ready to drop, lock, and load, baby. Buyers, come on out.
Wait, we're going to finish strong with you. If you noticed, I started with JT, went to Aaron, then came back here. Now let's go to you. Let's finish out. What's your prediction?
You know what? I want to jump on the bandwagon with these guys. I think we got to remain positive. There's a lot of people out there. There's a lot of people that want to buy homes. And we're happy to help them. And if we resonate positivity, then good things are going to come back. So I'm jumping on this bandwagon. Bring us back in 3 months, Wingman Podcast, and we're going to see where we are.
All right, we're going to final thing for the viewers. Tell everybody your Instagram handle. And Christina, since you thought I forgot you, we'll start with you now.
Our Instagram handle, thanks to Wingman, is at my worldwide title #1. Right, Tom?
JT.
Real estate with JT _
Mike?
Altogether, the man with the mortgage plan.
And we're going to finish off with Aaron.
Oh man, if I only knew what it was. No, it's Luxury Group INS.
All
is
right.
our
So thank
IG.
everybody for coming on. Thank you guys for coming on today.
Thank you.
Thank the listeners for listening. And I hope that they learned a lot today and have some predictions for what's going to happen. And again, these are 4 qualified professionals in the industry who I know. And again, when we bring people on, we like to know who they are and what they do so that, again, if you're listening to our podcast and you like Wingman and Britt Won't Quit, that, you're dealing with professionals that, we know as well and do business with.
Thank you, Tom.
Awesome.
Thanks so
Thanks,
much,
Tom.
Rick.
Thanks,
Thanks for
everyone.
watching. Thanks for listening.
Great day.
Have a great day.